a lot of people have been having issues with serviceability over the last few years with the Banking Commission and APRA and ASIC. Are they still worried about responsible lending now? And is that, I guess, the biggest issue for people to try and get pre-approved?
Responsible lending's been really good for Australia, and overall in the long term, it's a good thing. But when you have something like a recession, you really want the banks to lend as much money as possible because that gets the economy going. And so there's this kind of conflict between the economy and responsible lending. So APRA and ASIC have loosened some restrictions for banks, but it's typically been around hardship. So things like where someone's in trouble and they want to switch to interest only. So the government hasn't really changed the rules around serviceability. However, because rates have dropped so much, it does mean that serviceability has improved for most borrowers, so they can borrow more. But what we're seeing is it's about the non-bank lenders. The non-bank lenders are lending significantly more than the major banks. And so typically what we're doing for borrowers is we're doing a multi-lender strategy. You refinance your properties at the cheapest rate with a lender that maybe is a bit conservative. And then you buy your next property with a lender that has a slightly higher rate, but allows you to borrow more.
Right, okay, and that's interesting. And I guess for a lot of people, they're either restricted because they haven't got the deposits or they haven't got the income. Is there more and more people now that we've had a reasonable rise in the market over the last few years that they've got the deposits, they've got the equity, but they just can't do anything with that without the serviceability there?
I think it's less of an issue now than it was, say, 2 or 3 years ago. 2 or 3 years ago, it was a really big problem. And there are a lot of people that were really frustrated because they could afford a loan, but no one would give them one. So I think now the big issue is more around uncertainty and people's income. So we're seeing that people that are very certain about their income, for example, government employees or in sectors that are booming, they're all actually trying to buy. And then the ones that are more severely affected, they're all holding back.
Now, you mentioned that there's certain industries that are obviously seen as doing well or not so well. Does that mean if you're in one of those industries, you've got to prove even more than normal that, say, if you're in food and beverage or something like that, they're going to do a lot more checks than they might otherwise do if you're in government, say?
Yeah, that's exactly right. Some sectors the banks are looking at very harshly, particularly if you're self-employed. And there's a lot of people on JobKeeper, and banks are still a bit iffy about JobKeeper because they don't know if JobKeeper is going to be extended in September or if all those people are going to find themselves unemployed. And so we're finding some lenders will accept JobKeeper and others will not.